Tesla's biggest story today is not just semi, Robotaxi, or Elon Musk's pay headline. The real story is this: Tesla is moving from future promises into real world execution. And for long term investors, that is where we need to pay attention. Good morning, everyone. This is Ken. Today we have 4 Tesla updates: Tesla semi charging infrastructure, Tesla's $573 million in sales to SpaceX and XAI, California's new Robotaxi rules, and the headline about Elon Musk's $158 billion compensation. At first, these look like separate stories, but in my view, they all point to one theme. Tesla is entering the phase where infrastructure, regulation, energy demand, governance, and execution matter more than big promises. So let's look at what these updates really mean for Tesla investors. First, Tesla Semi. Tesla has launched Semi Charging for Business. This helps fleet operators install charging systems for Tesla Semi at depots, warehouses, and business locations. The key names are Mega Charger and Base Charger. Mega Charger is the high-power charging solution. Base Charger is more practical. It is designed for trucks that park for several hours, charge overnight, and return to the road the next morning. And I think Base Charger may be more important than it sounds, because semi-adoption is not just about the truck. Fleet operators care about routes, charging time, cost, uptime, and whether the system fits their daily operations. So this is not just a charging story. It is Tesla building the foundation for real commercial trucking. If Tesla can make electric trucking predictable and boring in a good way, semi could become a serious business. Next, SpaceX and XAI. Tesla reportedly generated about $573 million in 2025 from these two companies. SpaceX accounted for about $143 million, mainly from vehicle sales. XAI accounted for about $430 million, mainly from Megapack sales. The XAI part is especially important. AI data centers need huge amounts of electricity, stable power, backup systems, and energy storage. So if Megapack is being used for AI infrastructure, Tesla energy could become much more important than many investors realize. AI needs power, power needs storage, and Tesla is already positioned in that space. But there is also a risk side. SpaceX and XAI are both deeply connected to Elon Musk. So investors should ask whether these transactions are fair, whether Tesla shareholders benefit, and whether there is any conflict of interest risk. This could be real synergy, but it also requires governance discipline. For Tesla's valuation, trust matters. Now, Robotaxi. California's DMV has adopted new rules for autonomous vehicles. If a driverless vehicle breaks traffic laws, the company operating that vehicle can receive a violation notice. At first, this may sound negative for Tesla. More rules, more compliance, more legal responsibility, but I see this as part of Robotaxi becoming real. Until now, many Robotaxi discussions focused on FSD performance and AI progress, but real-world autonomous driving also needs legal rules, insurance systems, police protocols, emergency response, and public accountability. If there is no human driver, someone still needs to be responsible. That is what this regulation is trying to solve. So this is not just a headwind, it is a sign that Robotaxi is moving from technology demo to real transportation system. And long-term, clear rules may favor companies with scale, data, and operational strength. The question is not simply whether regulation is good or bad. The question is whether Tesla can operate better than competitors under regulation. Finally, Elon Musk's compensation headline. Tesla reported around $158 billion in accounting value related to Musk's 2025 compensation. That sounds huge, but it does not mean Musk received $158 billion in cash. Tesla says he received zero actual compensation in 2025. The $158 billion figure is an accounting valuation related to a future stock-based compensation package. So investors need to separate actual cash from accounting value. But this still matters because this is not just a pay story. It is about governance, dilution, shareholder value, and keeping Musk tied to Tesla. Many investors believe Tesla's premium valuation depends partly on Musk leading the company into autonomy, robotics, AI, and energy. So keeping him focused on Tesla could create value. But if future stock awards dilute existing shareholders, investors need to ask one key question. Will the value Musk creates be greater than the dilution risk? That is the real debate. So let's put everything together. Today's Tesla news is not about one flashy announcement, it is about the foundation behind Tesla's next phase. Semi-charging shows Tesla is preparing for real fleet operations. The SpaceX and XAI transactions show Tesla Energy may benefit from AI infrastructure demand while also raising governance questions. California's Robotaxi rules show autonomy is entering the world of real responsibility. And Musk's compensation headline shows how important leadership, incentives, and shareholder alignment still are. To me, the common theme is simple. Tesla is no longer just selling the idea of the future. Tesla now has to prove that future can operate in the real world. For long-term investors, that is the phase that really matters. Big visions are exciting. Robotaxi, Optimus, AI, energy storage, and electric trucking all sound powerful. But long-term value is created when those visions become real businesses. That means infrastructure, rules, customers, costs, margins, governance, and execution. So instead of reacting emotionally to every headline, we should ask better questions. Does this strengthen Tesla's business model? Does this expand Tesla's market? Does this improve execution? And does this protect shareholder value? That is the lens I want to keep using on this channel. Because for long-term Tesla investors, the biggest opportunities are not always in the loudest headlines. Sometimes they are hidden in the operational details. Tesla stock is currently moving higher, trading around $394. The stock has gained momentum over the past 2 days. But the bigger question is whether Tesla's business progress can support the long-term story behind the stock. And today's updates give us a lot to think about. That's all for today. If you found this analysis helpful, please hit the like button. I post Tesla updates and investor-focused analysis every day. So if you want to stay on top of the most important Tesla developments, please consider subscribing. Thank you so much for watching. And as always, let's enjoy life with Tesla.